Hello traders, this is another edition of Trader's weekly videos, and the topics of this video is going to be a default topic is a bigger picture on indices, on these indices here, so DAX, S&P and also other US indices as well. And in the second part I will go to some of the users' requests because I have received several of them, and I will go just one from Twitter and one from email in order to keep this video shorter, not to be like 3.5 hour French detective movie that nobody wants to watch. So now let's go to the charts first, and let's go on this bigger picture. So this is a familiar chart, really. I have posted this chart many times. Chart of the S&P, of course, mother and the father of all indices. So on Friday we had a break above this resistance, and it wasn't really some monster type break when stops are flying high into the sky and we get a massive short covering rally, big trend up day and so on. And the reason for this could be that Friday was quadruple witching day, which usually is something that is like range bound and so on. But we did have some kind of breakout, and now the question is it going to stick or not? And for that to be answered, we really need to watch what the market is going to do on Monday and on Tuesday and so on. Let's go now to the other indices, other US indices. So Nasdaq was the strongest, and it was leading to the upside. It made a break above this resistance here, and now it has stuck on this second one. We will see what is going to happen there. And Russell is again weaker than other indices. If you can see this, it really didn't make a break above this, and also made some kind of lower high and so on. And the clearer picture is on the daily chart. We will get there also. Let's go back and observe DAX for a bit. So DAX also made a breakout and then moved back on the lower time frames. It was looking like this, going back to test the yesterday high. All of this is already covered in the Friday's recap video, and now it's back here. And the interesting picture of DAX is at the daily chart, and DAX still didn't test the daily 200, and this resistance field is pretty wide on DAX. It's like a 200 point wide on the daily chart. Now S&P is here on the daily chart. This is this break. Nasdaq and Russell also. Now look how Russell is looking. Russell is the only one that is between 250, like DAX of the US indices. Nasdaq is above 200, S&P is above 200, and DAX is like Russell inside this. And on weekly chart, and I will now switch to the futures. On futures chart, all of these indices except Russell have bullish engulfing candle, meaning that this candle is engulfing the previous one that was bearish on all of these indices. And DAX that made first breakdown below this trend line dating from, as you can see, from September 2011, and then made a pullback on the back test and moved above not only trend line but move about weekly 200, is now here, and this is visible on weekly charts also. S&P has the bullish engulfing candle. This is S&P futures. Nasdaq futures has the bullish engulfing candle. Russell doesn't have it. So a bit of divergence between the US indices. and Nasdaq was leading to the upside, S&P following, Russell lagging. We will have to monitor this on the lower time frames like 240 minutes and the daily chart to see especially what is going to happen with this. What is going to happen with the breakout that was made on Friday? Is it going to stick on Monday? Is it going to be a follow through? Because when you look at the lower time frames, on Friday, when the S&P moved above the resistance, they made a pullback already and tested this area and got a bounce from it. And the same was on the Nasdaq, as you can see. This is Nasdaq 5-minute chart. But on Russell, as you can see, they didn't made a move above. Let's go to the 30-minute chart, or even better for the 1-hour chart, and to observe this. So this one is lagging, still lagging behind. So really nothing is decisive here, and the next week should answer that question. Are we going to make are we going to have a follow-through move or not? And especially because we have another Fed meeting, and you can see this on any economic calendar. Let's go here on the Forex Factory calendar, but you can use whatever calendar you like. And here it is. On Wednesday we have the FOMC statement with press conference. That is very important, because these ones that have press conference are have more meaning, are more important for the market. And now let's go to the questions, and this is one from the Twitter. Let's just open this. This is from Richard Ross. He said we could have a special weekly video discussing trends and scenarios, and this is it basically, but we could explore a little bit of additional tips or links for future reading. And he liked the video that I was shared, or some other guy who explained the false breakdowns, I think. Yes, he did. That was the explaining of the springs. So Richard, my favorite book about trading is this, Trades About to Happen. It is a modern adaptation of the Wyckoff method by David H. Weiss. There you will have lots of examples, especially on springs and upturns, or false breakouts and false breakdowns. Also I have, not very much, but here it is, some books in PDF format that I have. You could take, whoever is interested, print screen of this and send me an email. I could send you any of these books if you are interested in any of these. Some of them are for options, some of them are psychology, some of them are for day trading and so on. And my favorites here really are these shorter ones, like Principle and Psychology of Day Trading by George Slezak, then this one, Day Trader by Ziad Masri, and this Risk Manual by Paul Tudor Jones is also a good short read. And if you are into market profile, of course I have some here. So this is it, what I have, and you can have it whatever you like here. Also Mark Douglas, but I like more than reading his books. I like to watch his videos, and I have downloaded some from the YouTube, and by this here headlines you could find them on YouTube by yourself. And I find that hearing late Mark Douglas in these videos is really better for me than reading books. And here are some videos that I have in my library. And about next question that I have received on email, it was from Trader Paul about inventory. What I mean by inventory, he heard that topic a few times, and the support and resistance, aggressive support, aggressive resistance. What is better, support and understanding from your perspective? What's compromise, aggressive support, and what characteristic makes support or resistance better or worse? Okay, let's go now. We have inventory, we have aggressive areas of support resistance, and better areas of support and resistance. About inventory. Inventory is a term from a US market, And you will see sometimes that Jim Dalton is speaking about inventory. Here it is one of his tweets. He said, uh, overnight inventory is long and odds favor a correction. Failure to see that correction is indication of strength. So this was one of the tweets of his when he is speaking about inventory correction. What that means? And you could see in some of the previous morning notes that I have predicted some moves that first there's going to be inventory correction and then a move in the opposite way. And it is not a crystal ball thinking, it is just the fact that overnight players, so now we have overnight also, I mean pre-market session is like 8 hours long where some other players, not domestic players, are pushing the market into some direction. If they are going to push it too far, and too far usually means that they are going to make a move that is larger than 0.5%, and that you will have a situation near the open that DAX is already like 1% up or 1% down. That is the extension in the overnight. That is something that usually is not sustainable, and that means that you will get inventory correction like this. So market is going to the upside in the pre-market. Now this is not a representative illustration or example, because this move is was nothing much, but we had inventory correction. First filling the gap and then going to the upside. And inventory in this case means the sheer positioning of these players. So shop owner, his inventory are products. Fund manager, his inventory are his long positions. He will have some Amazon stock, some Microsoft stock, some Nvidia stock, some this and that stock. And futures contract players are going to have positions and inventory, long inventory or short inventory, meaning the long positions or short positions, and you will get usually a correction of that inventory. If you don't see that, if it doesn't happen, and that market is on the open minus 1% and it just continue to go down, that is the signal of market weakness. And if the inventory is net long and market just from the open just start to go higher and higher, that is the signal of strength, that the inventory correction is not going to happen, and that market is just going to go higher. That is something that is rarely happened. You can see on the daily chart, on any other chart, that market spends plenty of time ranging, then we'll make a move, then range, and then make a move, and then range. And on any chart, this is S&P chart, but on DAX chart or any other index, that market spends a lot of time ranging. And in that kind of price action, every move that is out of the ordinary is likely going to be corrected, because majority of moves, majority of time market spends in the range. And aggressive support or resistance areas are those that are labeled like pre-market support or pre-market resistance, basically ones that are very close to the opening price. Those are the aggressive ones. That means that market is holding the ground, and then the best example is that when market is in the buy the dip mode. And then when market is just moves like this, up, horizontal consolidation, up, horizontal consolidation, up. So you will not get a pullback. You will get just some kind of ranging activity in the pre-market, and then that will continue, and they will just touch pre-market low, let's say, and that is the aggressive support. The support that is holding because market is not allowing a better pullback for you, is not allowing conservative place for you to go with better odds. And that is what better support and resistance means. Those are the areas that have better odds of success if you are going to fade them. Also, not every zone is the same. Range edges are better zones that most usually will provide you a reaction. those are the better areas. If market is making a bigger move, let's say the market is making 2 8-year moves and just smashing through yesterday high, through this zone, to this zone, to this zone, and now their 2 8-year moves are here. This is better now zone of resistance, because market is already tired going through all of these zones, and on some zones you will have some kind of mini reactions, and some zones are just going to be stomped. It depends on the context of the day also. Is it a news driven move or not? Is it a breakout move or not? Is it a trend up or down day or not? So better support and resistance are areas that are further away from the price. The price needs to make a move into it, or is some kind of areas that are from larger time frames. And on the next video, Aaron, you will get a video about analytical process of determining high time frames and low time frames, levels and zones. It's an announcement for the next video. And this is it for this video. I wish you a good weekend and